The president now has to look for a new labor secretary as well as a new national security advisor who resigned over his communications with Russia. With so many questions, including some about the president's tax agenda, why doesn't the market appear concerned? Mark Zinder is a principal of Mark Zinder and Associates and former Franklin Templeton spokesperson. He's here to tell us why the market does not seem all that concerned. Good to see you, Mark.
Good to see you all as well. Thank you very much.
You know, we just mentioned that the market has done something that it hasn't done in a quarter century, this winning streak. Yet, when you look at the aggressive agenda in Washington and some of the difficulties that have come up in the last couple of days, one would think that the market might have a less positive reaction to that. What's going on?
You would think, but history has shown us that economics, matters more than politics. And so what you see going on in Washington, it matters in the short term, but in the long term, the economics trump all.
You work with and for Sir John Templeton, one of the most sort of storied investors of all time. What would he say about two things? One is the level of stock prices today, and two, in a broad sense, how an investor can assess the political risks and opportunities that are out there.
Well, with regards to the stock market, he used to follow something called price to book, and let me explain. He was a value investor, Benjamin Graham, a value investor. Benjamin Graham wanted to know what is the value of the company, what's its breakup value? And historically, stocks have sold about twice their breakup value. And right now, they're not that high. They're about 3 times book value, and historically, 2.5 is the norm. So I don't think we're overvalued.
What about the economics of the country right now? We have the Fed probably on the verge of raising interest rates at least one more time this year. We have a little bit of inflation coming in, which is good.
Sure. Does
that continue to underpin this market? I mean, do you longer term see this market continuing to move higher?
Oh, absolutely. These are all good things. The one thing we have to look at as far as the stock market is people say, well, it's running long in the tooth, or the economy. This economy is long in the tooth. And what you have to look at is not how many years, but your average GDP growth expansion is about 23%. We're only up 10.6% trough to peak right now. And so I think we still have a lot of room to go. And as far as a bear market, they say it's a 20% correction. Well, we had a 19.9% correction in August of 2011. Why didn't that count, right? That should count. So I think we have a lot more room to go.
A lot of people inside the Beltway, in the media in New York and Washington, are wringing their hands over what's been going on in the administration. Already this week, he's lost his national security advisor to a resignation. Now the labor secretary. Sure. There are ongoing investigations into contacts between campaign workers and potentially Russian intelligence. But the market is playing past it, and I sense most of the rest of the country is focused on something that they see as far more important, and that is a better business climate.
Absolutely. If you look at what is potentially coming down the pipe, right? What stocks go up because earnings improve. Well, you start cutting taxes, tax reform, maybe you reform Dodd-Frank, that will improve corporate balance sheets, and of course that makes things just look so much better going forward.
All right, we'll leave it there, Mark. Thank you so much for spending time with us.
Thank you all. I greatly appreciate it.
You're very welcome.